Good morning, traders. Today is Monday, May 24th. My name is Charles, and this is the Pirate Traders live stream. All right. Well, what are we looking at here in the markets? Well, really quickly, the overnight inventory is about 85, I would say 80 to 85% long. They opened down here, and they're closing up here. So that is bullish, but it also could lead to a counter auction. Right, early on in the day, we might expect the market to pull back a little bit as a counter auction to the overnight inventory. All right. We are opening inside of yesterday's range, so that increases the chances that the market might need to chop. We are above the value area, so it's not quite as intense, the getting stuck in one spot and chopping, but I do expect a little bit of chop. So we got a potential counter auction to the downside. We got some potential chop. Looking at the overnight inventory, I was just noticing how it looks when it's expanded out. Oh, there goes the bell. The market is open. What I was going to say was if you expand out the overnight, it's pretty much like they went down and they explored prices below yesterday's low and immediately pulled right back up and went straight up for the rest of the night. So that to me is an indication that there are bulls in this market and that the momentum buyers are in control. Just give that data a minute to load here. Market internals opening bullish. So we've clearly got a trend in value here that we can see very easily. Value higher or overlapping to higher, overlapping to higher, overlapping to higher, overlapping to higher, right? So that's bullish, right? Could mean more sideways or higher. And then you can see the overnight inventory. Let me just expand this out real quick. So you can see they came down here. They dipped below yesterday's low. Got just a few bucks below the halfback from Thursday. Okay. And then immediately found some support and started rotating up. From that point on, it basically trended higher the rest of the night. Okay. Look at that. I mean, that's just a 45-degree angle to the up and to the right. So that to me means that the trend buyers are in control here, the momentum buyers. So we'll see, can they maintain control throughout the regular trading hours session here today. As far as trades go, early on in the morning, I mean, anything that doesn't get below this first pullback that we had, it might be buyable, right? Let's give the internals a good half an hour to settle in here and make sure they stay bullish. But if so, that wasn't much of a counter auction to the overnight inventory that we got there. We went all the way, prices went all the way from down here to up here, and the only pullback we got was right there. So just visually with your eyes, you can see that's not much of a counter auction. So that could be the first signal that today could be bullish. A pullback that gets below the POC from overnight down here would be very bearish to me. Also, we opened above that week reference, so it's repaired. Yeah, so you got the POC from the overnight 2 nights ago, the POC from the overnight last night, all kind of in the same area. Look where they're putting in volume. So this should be support on a pullback. A failure of this area could cause further downside continuation. Also, there's always the potential for a look above and fail of yesterday's range. Market trades up to the poor high we left behind on Friday. gets a couple ticks above it or gets way above it, doesn't matter, and then pulls back down into yesterday's range, and that causes selling towards the opposite end of the range. Okay, so that's another potential for a short. Otherwise, it looks bullish here or like it'll go sideways. I shall keep you posted as I see more. Good morning, Naif. Good morning, RK Leon. Good to see you. Philip is with us. Good morning to you. Gianfranco is back. Good morning. Marco is here. Good to see you. Stanley is back. Good morning, Stanley. The Royal Prince is with us this morning. Welcome, Your Highness. Stan Kuman. Good to see you again, brother. Welcome. Carlos is back. Good morning, Carlos. I had a good weekend. Thank you for asking. Miles is back. He's seeing 41.85 as the break. Oh, he's asking. 41.85 breakout level. Yeah, potentially to the upside. So again, as always, as we do with a previous day's high, if the market gets above the previous day's high, which it should do because it's a poor high, so that should be a magnet that pulls on the market today. Once it gets a couple ticks above there, though, then we need to start looking for support. So the market pushes above, it comes back down. If it doesn't find support near the high, then it's likely to be a look above and fail that rotates back down to the opposite end. So we look for support there. If we get support at 41.85, it's a great breakout trade for further continuation higher. Arthur is here. Good morning to you. Mediterra is back. He's seeing a fib at 41.8625. So there's your thing, right? If it's a fib and the fib is going to act as resistance, the market trades its way up. It gets up there. Then it hits that resistance, pushes back down into yesterday's range. So that's potentially what could cause the look above and fail. But let's not get ahead of ourselves. Like I said, right now, the overnight market tells me that the buyers, the trend buyers, are in control. And the trend is up. Borenthor is here. Good morning to you. Shri is back. How's it going? News Blip is with us. Good to see you, brother. Welcome. Single Prince. Design Novice here. Good to see you. Welcome. Thank you for the reminder, Stan. Everyone, please hit that like button. It's a great way to support the channel, and if you do it first thing here in the morning, it really helps that algorithm. Frank is back. Good to see you, Frank. Welcome. And Rob is here. All right, guys, it's Monday. Let's make some money. What up, Donkey? Good morning, brother. Yeah, I wasn't even watching it this weekend, but just when you said that, I pulled up Coin Market Cap. Just look at this. Try explaining this to somebody who's been trading stocks for the last 40 years. Last 7 days, down 15%. Last 24 hours, down up 15%. Last 7 days, down 30%. Last 24 hours, up 25%. These markets is bonkers. Bonkers. Yeah, I don't know if diamond hands is the right word for it, Stanley. I think sheep. That's the word I would use. Wool hands, or I guess they have little hooves. Sheep hooves. That's what I'd call them. But okay, if it's working for them, they should keep doing it. Yeah, Donkey, I mean, that's how it goes. That's crypto. They dump it, then they pump it. Rinse and repeat over and over. Big guys taking the money from the little guys time and time again. But all it takes is that one little guy getting rich, and he's going to tell all his friends. And then they're all going to give their money to the big guy. All right, I may be a little bit early to make this call at this point, as we're still kind of in the first 15 minutes of the day here. And we could, we're inside the previous day's range where we often get chop. So we could get that chop that pulls us right back down here. But, besides the 37 contracts at the low, which is the only thing that's sort of catching my eye in a bearish way, all of this looks pretty bullish to me. I liked the overnight activity. I liked that we're building volume above the halfback, above the opening price, and that all we got as a counter auction to the overnight inventory was this one little pullback. So I would think as long as we stay kind of above the halfback here today, above 41.7750, we should continue to push higher. I'll be wrong, and I'll go back to feeling neutral if we pull below the opening price here. It is worth noting, just right below there, there's only 600 and 700 contracts, so that might need to backfill. But we're 15 minutes into the day, and the internals remain bullish. So it seems like the short-term trend traders are going long. And that makes me feel bullish. At the very least, to get to the poor high here at 41.85. Yeah, if that's the case, Arthur, there's absolutely nothing wrong with stepping aside and letting the market trade for a few hours before you step into any trades, right? Just sit and watch it, get a feel for it. I normally don't get, feeling bullish this early on in the day myself. Normally it takes a bit more to get me there, but I'm just seeing it as a potential push higher. You got that poor high. Like I said, I'll be wrong if we get below the opening price. Okay, so once again, it looks like they're trying to get up there and repair that poor high. And then the question becomes, what happens when we get a few ticks above it? So say anywhere above 41.8550. What happens when we get up there? Do we run out of buyers and the market rotates back down, back down into yesterday's range? Or do we find support somewhere around this area and then continue higher? Let's wait and see. Thanks for the subscribe, Diamond. Welcome. Gianfranco, that's absolutely possible, right? To create the poor high, they had to put in some shorts here, right at that previous A period high yesterday. So you might get a little short covering rally up here. But the question is, again, what happens once we get up there? A quick little short covering rally will happen very fast. Tempo will be very quick, and then it'll probably pull back down to the high of yesterday. So that's when you look for the support. Okay, and with that breakout above, well, not breakout, but that push above yesterday's high, we do have 2 ticks of excess, so the poor high is repaired. I'm going to leave the high marked here, just take away the poor, just so that we keep an eye on it for support. We are also 1 time framing higher here in the B period. We've also just pulled the value area higher. So that's 3 bullish signals, 2 very potent bullish signals, right? The 1 time framing, very potent bullish signal, and the value being higher, very potent bullish signal. So now the odds, I think, of finding some support here around the high on a pullback seem likely. So let's keep an eye on that and see if that's what happens. At this point, to get the cessation of 1 time framing, the B period would have to trade all the way down below the A period low. Okay, this is that short covering. If anyone took a trade to that poor high to get that repair and they just made some money, please smash that like button. Like it on up, thumbs it on up. All the cool kids are doing it. News blip. Internals look bullish as well. They do. The ticks could be starting to trend down. So that's something worth keeping an eye on. Essentially, once the trends start to push below the zero line, do they just kind of wick? Do they push down and immediately pull right back above the zero line? Or do we continue to get this trend pushing below the zero line? If we do, that could lead to the pullback, the look above and fail. So let's keep an eye on that. We're in that critical area right now where we just need to build some volume. We need to do this right here, this red node. We need to put that kind of volume in up here. That would be a sign of support. True that. I didn't even pay attention to the volume. In the last 15 minutes, the volume has fallen completely off the maps. Worth noting. Miles, absolutely. You got so many bullish signals. You got value is higher. Your one time framing higher. You had an opportunity for a counter auction that you barely got any counter auction to. Internals are still bullish. Oh, I don't know. That trend, that might be about to change, but at this moment, they're still bullish. So yeah, if you find support around here at the high, that's a great entry. It's better to wait until you find the support and then do it. Because like, let's say, for example, right now, you were to go long at 41.85, right at the high, right? Market pulls down, fills your position, and you're like, sweet, 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 sweet. Where do you put your stop? Right? If you're just catching the first pullback to this high, where do you put your stop? My best guess, you'd put it below this node of volume down here, but then you have to give all this money to the market if you're wrong, and it's a look above and fail. So if you wait for the market to come back and then definitely find support, you wait till you have a bunch of big red candles like this in here, then you can enter long and you can put your stop loss just below the node of support. You know what I mean? But with these random contracts here just below the high with only 167, 150, 430 contracts, so that's 84 to 84.50. This probably needs to be backfilled, even if the market's going to push higher. So you want to wait for the market to pull down and definitely find support first, then you go long. If not, this thing could be a look above and fail. It pulls back into yesterday's range, and rotates down. Happens all the time. It's my pleasure, Miles. That is correct, Carlos. Um, at this point, to change me from bullish to bearish would take several, there'd be several signposts along the way that would have to happen. So the first thing would be the market would pull back down below yesterday's low or yesterday's high, and it wouldn't find support, right? We wouldn't start to get these red candles building up in here, and instead it would keep trading down. Okay? So at that point, I would go neutral. I'd no longer be bullish because we had a look above that could potentially become a look above and fail. So I'd be back in neutral mode. Okay? Then I'd watch what happened when we got into this node of volume that we built up this morning. Does that act as support? If it did act as support and we started to push higher again, I'd be bullish again. If it failed, I'd remain neutral, right? In order to get outright bearish today, I'd need to see the market completely retrace, create the cessation of one time framing, and then continue to push. To become all out a bear on today, I'd need to see us get below the POC area from Friday. But I would go neutral on the look above and fail. So if the market doesn't find support somewhere around the high here, that will put me back into neutral mode, which means I can go long or short. I hope that helps you understand. I won't go full out bearish though until clearly this trend up, right? We can see there's a trend up, right, guys? It's not hard to visualize. Values higher, 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 higher. It's moving higher. So the only thing that's going to get me bearish, outright bearish now, is clearly seeing that trend is over. Okay, next resistance, we got our first red candle. Okay, so next resistance to the upside is the base of the spike down from 510. That should act as a pretty strong resistance here at about 41.90. So let's see what happens when we get there. Dr. Dinesh, great question. Happy to dive into that. So yeah, Jim talks about this conceptual idea that short covering actually weakens the market, right? And the idea is when you go short, okay, on the market, you are no longer a seller. So what we're always worried about at every moment of time in the market is the next people who enter a trade, what are they going to do? Are they going to go short or are they going to go long? So if you're already short the market, if you're already holding a short contract, I guess you could add to your short and get, more short, but conceptually thinking about it, the only thing you can do once you're short is go long, right? Like, 'cause you have to exit your short. You have to take your profits at some point. So you have to go long at some point once you're holding that short contract. So when you get a short covering rally where those people are freaking out of their shorts and they're just exiting, they are now fresh money to go short again. You're actually taking buyers out of the market, right? Because when they were short, so let's say somebody went short right here at the A period high on Friday, right? They went short right there, got nothing for it. They got one tick. They watched the market trade all the way down. They got scared. They waited. That whole time, they were a buyer because they had to get out of their short. So now the market trades its way all the way back up to here. It gets above where they shorted. They finally give up and they go, fuck it. And they buy a contract to get out of their short, to cover their short, right? Boom, price pushes up a little bit. Well, now a person who was previously a bear at this level, right, who previously thought the market was going to go down, so they went short, now they've got fresh money. They're flat again. They can go either way. So they can weaken the market because that's one less buyer to push us higher. One less buyer to push us higher. I hope that helps. So when somebody goes long, they are a seller. So there are sellers waiting to go short. So when you have a liquidation break, you take them out of the market and vice versa. Probably it's too early for these deep concepts if I'm over explaining. Let the coffee kick in. Okay, so once again, 41.90, next resistance above. Okay. So this, just for those of you that are trying to learn how to read a market, this is more short covering and now FOMO buying piling into this. I know because of the thin volume. 200 contracts here at this level. 500 here, 500 here. So they're getting emotional with how they're pushing the price higher. Okay, market coming in here, backfilling some of those contract levels. So the idea is if it pulls back down to where these pink candles are, does it start to find support and grind its way back up? Internals remain bullish. Okay, we're also about to, I haven't scanned over yet, but I feel like we're about to break out of that previous value area. Oh no, not quite. That we had been in. Yeah, I mean, not a lot of resistance between here and that J period single prints up at 42.14. It's a little bit, but not much. If I had to mark something, I would go right here. So this won't be an exact resistance where it'll literally hit this exact number and then pull back down, but somewhere in this area where you had the high of 5.6, the low of 5.7, and then the POC of this overnight right in here, this whole area could become resistance. Once again, just a reminder for those of you feeling the FOMO that we got lots of levels here with thin contracts, 800, 700, 500. Down here, 150 just below, still remains just below the high of yesterday. So this is starting to become emotional FOMO buying that always pulls back at some point in the day. Dr. Dinesh, on the question about does the volume in the index futures have any influence on price movements? Yes and no. I mean, essentially, everything is connected to everything else, right? So there's arbitrage bots that when people are buying the underlying stocks and the value of the 500 stocks in the S&P is going up, those bots will recognize that happening, and then they will buy futures to match, and so on and so forth. So I wouldn't say it is volume in the futures that affect the underlying stocks or the underlying indices. I would just say it's the price movement that has the effect on the underlying indices. That being said, what do traders like you and I look at to make decisions about where to buy or sell? Well, we're looking at volume. So yeah, if you bring in a ton of volume on the futures, it's going to give more confidence to the people buying the underlying assets and vice versa. All right, the spidey senses starting to tingle. All right, we're up here. We're on thin volume. We're on tons of single prints in both the A and the B period. We're above value. And the ticks are beginning to trend lower. So this feels like it's setting itself up for a nice little pullback. But remember, momentum buyers can keep pushing to exorbitant levels. So I'm not ready to go short this market. But if a pullback were to happen, I'd be looking for entries to go long once it did. Yeah, volume is starting to come in here, although I'm not sure it's supportive. It's feeling more like resistance than support. So let's give it a few minutes to work itself out here. Rotating above value, you often get a pull back to the POC. And you got lots and lots of thin volume up in here that needs to be backfilled. Okay. Also, we just created all these single prints here in the B period, increasing the odds that the market will need to backfill them. Tick still slowly trending down. But the FOMO buyers want to give it another push first. Okay, so if the market does try to pull back down here to fill some of these single prints left behind in the B period, I'd be looking for the market to find support right here in this node of volume between basically the base of the single prints and about 41.87. So 41.85.25 to 41.87. Be looking for the market to find support in there. And it's in terms of a long trade, to me, it's a pretty good risk reward entry. Because if the market were to fill the single print and continue down just 4 more ticks, that would be the cessation of one time framing. Okay. So I could put my stop right there. Although now that I'm looking at it, actually, I think that's what will happen. I think we'll get the cessation here because to backfill all these single prints, we get just a few bucks away from there. And we've got these contracts with only 100. These levels with only 150, 160 contracts. If the market were to pull back to here, I don't see why it wouldn't come in and backfill those. And then that would be the cessation of one time framing leading to rotation. So for the trend to continue, we will have to leave these single prints behind. Let's see if that's what happens. Okay, created a poor high here in the C period. So do we get a push away from the poor high that could lead to the backfilling of these single prints? Or do we break right back through it and continue higher? The immediate break right back through is more bullish. Okay, busting through this poor high to the upside could also break the downtrend in the ticks, get us a higher high. That would be bullish as well. So that would be too bullish. There it is. Let's see if we got the higher high. Not quite yet. Okay, so the one time framing is now confirmed in the C period as well, which is bullish. We're about to break the trend of the lower highs, which is bullish. So this could be supportive volume, setting us up for another push. Keep these single prints in mind. Don't forget about these. At some point today, the market's going to want to come back and backfill them. But right now, the momentum buyers are still in charge. Yeah, that's exactly right, Miles. I would be constantly monitoring for continuation. So when the C period printed and it left behind all these single prints and had all this thin volume, I would move my stop up to here. And then I would think if the market comes down and fills my stop, I can start putting entries back in here to try to catch it on the fill of the single prints. The only reason that I might not do that is the fear of the cessation of one time framing, right? If the market pulls its way all the way back down to this B period low, you get the cessation here in the C period, right? Then the market's going to rotate. Well, I don't want to buy above the POC if that's the case. But in terms of monitoring this trade for continuation, it is still going higher. So I would definitely keep your position on and see how far they can push it. Let's pop over to the NQ real quick and take a look what that guy's doing. You're about to get back up to this previous balancing area you were stuck in before, and that'll be interesting to see what happens there. Okay. So, yep, same as ES. Barely had any pullback this morning. Pushed higher on very thin volume. Found support at Friday's high. Another leg higher, leaving behind single prints and B period. It's almost identical to the ES. They're back in tandem, baby. Yeah. Yeah, those 15-minute candles look like they're going straight to the moon. Where are you going? To the moon. They won't, though. That's just a joke, everyone. FOMO runs out. Emotional buying runs out. And then it retraces very, very quickly. Close. It was Rodney Dangerfield. Hey, Rodney. All right. Well, this is really bad taper on the high. Could this be the moment? Are we running out of buyers? We've pulled the value area higher. That's bullish. But still got all these single prints that need to backfill. Easy Money Mondays, the new Smooth Jazz podcast, all about Mondays. Tune in soon. So, what does the taper tell us? What was the lesson we learned from the taper being so bad up here at the high? Well, that this probably wasn't the end of a two-way auction process, right? This wasn't the buyers running out up here. This was sellers trying to force the buyers down. This was sellers trying to fight one time framing, trying to fight the trend and force an end. And what usually happens to people who try to fight one time framing? They get slapped. So I have a feeling that those momentum buyers are still in control, and they're buying this up here, which is support, to try to go back and get another push higher. Get some good taper on this high. I'll be wrong if we keep pushing down below the zero line in the ticks. Design Knob, please tell me that this is a joke. Did you get hit today? Were you trying to fight the trend? Were you trying to short a market that was trending higher? Tell me, Design Knob. Let's work through this together. Oh, brother. Well, you know, the good news is that you can learn from it and not do it next time. Don't fight one time framing. Don't fight a trend. The better trade, if your senses are telling you to short because it's telling you the market needs to pull back, that's when you say to yourself, all right, self, great. I think the market's going to pull back, but it's trending higher. So I'm not going to short it for the pullback. I'm going to pick where I think it's going to pull back to, and then I'm going to go long there. I'll do it right now to give myself something to do. I'll go ahead and put in a limit order right there, just so that I can keep my mind busy while I wait for the pullback. Never, ever fight one time framing. Don't fight a trend. If you don't trust it, step aside. Let the other traders trade, and you wait for an opportunity that you do trust, but don't fight a trend. It's just a matter of statistics. You won't win. You will lose more than you will win. Yeah, Design Knob, this is a great observation, though. What you're saying here was like you were just looking for small pullbacks, but that's the question that I have is like, what's going on in your brain that you're seeing a market with this much push higher and you're thinking the opportunity for me is in a tiny little pullback, right? I'm going to make my money on the tiny little pullback. I don't understand why that's what you're looking at when the market is saying, look at me, my next major resistance is all the way up here at 42.14. Like, this is a trending market. You got value higher. The better opportunities will be going long with the trend. Then all you have to do is find an entry and monitor for continuation. Whereas if you try to short to catch those little pullbacks, you don't know how far it's going to pull back. Where do you take profits? You know what I mean? So use this as a learning opportunity. Say it to yourself over and over again. If the market is trending a direction and I think the trend is coming to an end, I wait for the pullback and then go with the trend. I don't fight the trend. The instincts that you're feeling are totally normal. That's why these trends happen, right? It's all of us looking at this and thinking it has to pull back is why we built up support and are now continuing to push higher. It's the market is constantly looking to squeeze as many participants as hard as it can. And it loves stuff like this. It loves momentum where the buyers just take control and keep pushing all day and just drive everyone mad because they never get a pullback. So join the party. Don't fight against it. Joseph, thank you for the subscribe. Welcome. Okay, we're getting a little better taper up here at the high. We got to get some more contracts at the very high. 34 is not enough contracts. Got to be at least 100. But now we're getting some nice taper. So I suspect if we do get another push higher, we might start running out of buyers and set ourselves up for that pullback. Let's see what happens. Design knob dementia. It's not dementia, bro. It's totally normal. I promise you. There are dozens of people in the chat who have also been shorting this all day that just won't speak up and admit it. I promise you, you're not alone. Okay, so now we might be set up for the pullback. We had a little bit better taper. Didn't quite get up to that high to put some more contracts in there, but we did get a better taper. And now the ticks are really starting to pull down into the negative area. Okay, so now as we print the D period, ooh, we pulled the POC higher. That's bullish. But now we only have to get down here to about 41.9250 to get the cessation of one time framing, which would cause the market to go rotational at these higher levels. Okay, and that makes perfect sense to me because of all the excess, right? All these single prints from the opening price here up to the B period here, those are excess, okay? And then the B period up to the C period, that is also excess. So we created a lot of excess this morning. What does the market do with excess? It balances, right? So there's two options for how we balance off this excess. We either start rotating up here at higher prices for the rest of the day and spend enough time up here to get acceptance and bring in enough volume up here to get acceptance, or we pull back down, okay, with price and then repair it that way. So we're still trending. We're still one time framing. That won't happen until we get below the C period low, but we are setting ourselves up for that. Let's see if the buyers can give it one more push or if they've run out. Yeah, 92.50 is cessation. All right, well, they're doing battle here, the buyers and the sellers. So the breakout of this sort of range that we're getting stuck in here could lead to what to expect moving forward. If they can hold the one time framing higher, the D period is likely to push above the C period high and continue to trend higher. If they cannot, a cessation of one time framing likely to cause the market to go rotational, and that could bring the pullback down to the halfback in an attempt to fill these B period single prints. It kind of feels like, so the ticks are trending down, but the market's price is trending up. So it kind of feels like it could go either way here. I will say going long at the POC here is that a good risk reward entry, because you could put your stop just at the cessation of one time framing, 2 ticks below the C period. Yeah, Design Knob, if you're finding that you're really frustrated and you're thinking about quitting and going back to your day job, there's nothing wrong with taking a break. There's nothing wrong with saying, I'm going to just not trade for 2 weeks or for a month, and just let my brain refresh and then kind of see how you feel at the end of that month. Do you long to get back into trading? If you do, then give it another go. Don't give up on something you feel passionate about and you feel drawn towards doing. But if in a month you kind of feel a sense of relief that you haven't had the pressure of trading every day, maybe that's the signal that, finding another way to make money might be the right move for you. I always tell people not to feel guilty if they don't think they can make it as a trader, because it's one of the most competitive things in the world. That's like feeling guilty you couldn't make it as a neurosurgeon, so instead you've become a heart surgeon or whatever. It's like, who cares? You're still saving lives. You're still, you're still doing good things. You can still make lots of money in life if you don't make it as a trader, right? You can become a long-term investor. If you're a day trader, you could become a swing trader. You could start a business. You could invest in real estate. You could get re-educated, get a better job. There's a million different ways to make more money if all you want is money. The people who are trading should be the people who trading is what's exciting for them. The thrill is the trading, not the money. Those are the people most likely to be successful. But there's nothing to be ashamed of if the day comes that you realize trading is just not for you. You might make a killing in real estate. Slade is back with us. Good to see you, brother. Welcome. Miles, what's my favorite part about trading? Winning money. It's hard to beat the feeling of having an idea of what you think the market's going to do, putting just a little bit of risk on the table for it, and then getting a great big reward in money. That's what I like. Yeah. Design Knob. The other idea is there's nothing wrong. There's nothing wrong with paper trading. If it's starting to hurt your wallet a little bit, just paper trade for a few weeks. get your win rate back up, and then go back to real money. You know, nothing wrong with that. You know, if an athlete were to sprain their ankle or something like that, nobody would judge them for taking it easy for a few weeks. You know, paper trade. Get your confidence back up in the same way that that athlete would train light in order to get the strength in their ankle back up before they got back to the hardcore stuff. Still doing battle here, right in the same range. The buyers and sellers competing to figure out who's going to win. Obviously, the buyers have a slight edge. We've pulled the POC higher, we've pulled the value area higher, and we're one time framing. But the sellers are so close to getting that cessation, it could go either way. Yeah, design knob, that's great. So there you go. Again, we've got a great place to start. So you know you're a good paper trader. So that tells you your strategy works, right? The system that you use to decide to get into trades, that does work. So then you can start taking every trade that goes against you and ask yourself the question, like, make the assumption this trade went against me because of emotion, because of psychology, not because of my trading strategy. So, okay, what caused that, right? What psychological thing caused me to go short against the trend this morning? What psychological cause? And then each time you make a mistake, ask yourself that question. What was the psychological thing that caused me to make the decision I did? And then over time, as you notice what those things are, you can become better at overcoming them. All right, looks like the buyers are starting to build a little momentum. They're getting those ticks back above the zero line. They want to push it. Miles, did it take me a long time to become profitable? Yeah, years and years of losing money. Years and years and years. I would say from the point where I decided to become a day trader because of COVID, it was probably about 6 months before I became profitable. 6 months and 3 courses with Jim Dalton. What kept me going? Addiction. I'm addicted to gambling. That be the true. I tried quitting trading multiple times, but then a week would go by, 2 weeks, 3. I'd see an article pop up about something that happened. Oh, Tesla's up 10% today. Wait, what? What's that? What's going on? And I just had to get back into it. All right. Well, the buyers still seem to be in control. We are breaking out of this little range to the upside. So that is bullish. Let's see if they can get another big push for it. Yeah, Miles, that's a great observation. The path to profitability, it generally requires first going through a long phase of breaking even. You know what I mean? A long phase of like not necessarily losing money, but not necessarily making it. Like you'll have a couple of days where you'll be profitable, and then you'll have one day where you give back those profits, and you kind of keep going. But if you're at that point as a trader, you have what it takes. You just have to keep pushing. You have to keep learning and developing, and but like you have what it takes. Don't forget, this market takes 90% of the participants' money. Okay, every single day. 90% of the people lose. So if you're just breaking even, you're already better than 90%. Daniel, thank you for the sub. Welcome to the community, my friend. All right, buyers, you got another push in you? You going to push it, push it? They got everything on their side, okay? Continuing to one time frame, continuing to pull value higher. You pulled the POC up here. You're getting acceptance in both volume and time at higher prices. You've reversed the downtrend in the ticks. Your other internals are remaining pegged up and to the right. Ogagar, another subscriber, welcome. So all those things are bullish. Let's see how far they can take it. Push it real good. Do 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 do. Real good. All right, another poor high. Who thinks they can guess what I'm thinking after seeing two poor highs created today? Oh no, the new subscribers, they need to know what they're signing up for. Push it real good. Wah, 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 wah. John Doe, I would love it if you would back up dance. How do we make this happen? Can we get like a video feed that we connect to the live stream? Let's work on this. Oh, yeah, I'm scaring them away. It seems like my music is bringing in more subscribers. Thank you, Tom. We know you love it. Okay, well, nobody answered my question as to what I thought creating two poor highs. If you remember, we created a poor high in the C period for a minute before we were able to push higher, and then we just did it again in the D period. And so what that's starting to feel like to me, well, first off, it's a signal of short-term traders are in control of the market, right? We can't trust short-term traders over a long period of time because they have to take profits on their trades. So that's the first thing I'm thinking. And the second thing I'm thinking is we are running out of buyers here. We keep getting just a few ticks above the previous level, and then we need to rotate back down to bring in more buyers. So it does feel like the move is coming to exhaustion, but we don't short it, right? Because they're still in control. The trend continues. Okay, created another poor high here with the printing of the E period. Lewis, the number 3 that you see next to the D here, that just shows you the number of TPOs in the POC. So it's just telling you there's 3 TPOs there. I don't really ever look at that number. Okay, once again, it feels like the buying is coming to exhaustion here, right? Ever since the C period, it stopped being the emotional, hypey type of buying, and it turned into this sort of a slow, grindy, push higher type of buying. There's 2 sort of options for what that could be. It could be bigger players kind of stepping in and positioning themselves here. I don't think that's the case. What seems more likely to me is that it is, late buyers. It's the late majority laggard type of buyers who just were too scared to go long in here. And so now they're seeing this as the dips that they can buy. But they're not really getting much for it. So I think that they too will run out. We got good taper at the high. I wouldn't call it good. We got acceptable taper at the high, 3,000, 2,200. I'd rather that top one be closer to 1,000, but it is tapering off. So at any point here, the market could pull back. Another new subscriber. We're killing it today. Welcome, Scott. Good to have you. Yeah, so as far as the market pulling back, we'll know a larger pullback is going to happen after we get the cessation of one time framing here in the D period. So same as I said here in the C period, if we get it, look for the market to pull down and try to backfill these single prints. And then does it find support? Once it finds support, it's a long for rotation back to the POC. And then you just play the game all day long. Push higher than value, go short to the POC. Push lower than value, go long to the POC. So still too early to do that. We're still one time framing higher. It just definitely feels like this move is reaching its end. So I'm preparing myself for the future. Cine Mac, great time for a liquidation break. Yeah, I don't know. I mean, it's probably too early for a liquidation break. I think any kind of pullback here will be orderly. You know what I mean? It'll get down below this D period a few ticks, then it'll like pull down here and rotate back up and pull down here. I think it'll kind of grind its way down rather than be one giant big drop. But I could be wrong. So there it goes. The market giving me that sweet, sweet taper. Now it's good taper, right? 4,000, 2,000, 1,500, 169. That's good taper on the high. So was that the two-sided trade we needed to the upside to cause the pullback, or do we have another push in us? Let's wait and see. Fausto's in the house. What up, brother? Good to see you. Welcome. That's awesome, Fausto. Congrats on the job, man. Just remember, put a little bit of that money away for future trading. You know you want to. Well, just keep doing it, man. Check off one thing at a time. One step forward. All right, so yeah, it does feel like the market kind of ran out of buyers. Up here, we got the nice taper on the high. So now that we've pulled back down to the fairest price to do business, does it bring in more buyers? Or do we pull back down below the D period low, causing the cessation of one time framing? Well, I think that's awesome, Fausto. You know, you got to start somewhere. You got a plan. It sounds good. Keep working. You'll get there. Okay, so once again, market back at the POC. A lot of indecision here. At this point, the strength of the momentum is sort of coming to an end here. So in my mind, we are getting close to that cessation of one time framing. But we haven't got it yet. Okay, printing of the F period here got us one tick below the E. We need 2 ticks for the cessation. Yeah, Train Donkey, that was a nail biter for a second there. The trend remains intact. They could always give it another push. All right, Scott, thanks for stopping by, brother. We'll see you tomorrow. Lars and Mackie Max, welcome to the channel. Happy to have you guys. Thanks for the subs. Correct, Cinemat. The ticks are trending down here. It's just a sign that the laggard buyers are starting to run out here. Those people who missed their chance this morning and are dying to get in here and try to make some money, they're slowly but surely running out because they're not getting anything for it. We need one more tick below the F period low here to get the cessation, which once again would lead us to start backfilling some of these single prints left behind from the B period. I don't think it'll be a liquidation break type of thing. I think it'll be kind of like we grind down a little bit, we push back up. We grind down, we push back up. Let's see what they do. Oh, yeah, ticks are pushing. John, are you labeling yourself a laggard buyer? We established that you were a laggard buyer like a month ago. Okay, I may have pushed the button a little too soon, but we're about to get the cessation here. There it is. All right, so that is the cessation of one time framing here in the F period, increasing the odds that the market will go rotational for the remainder of the day. As I mentioned before, I'm looking for the market to try to backfill these single prints left behind in the B period. If it's able to find support somewhere down here around the base of the single prints, that would be a good trade long for a rotation back up to the POC. For those of you that are regulars to the channel, you know the way I personally like to trade rotational days. I like to buy below value for the rotation back to the POC. So I take profits where the letters are green. And then when the market gets above value, gets above the blue box, I go short again for a rotation back to the POC, to where those green letters are. Okay, so at this point, that is my MO. Those are the trades I'm looking for. And I will let you know if I see any change in the market from here. But otherwise, I assume rotation. Yeah, can I explain what the cessation of one time framing is? The word cessation just means like coming to an end. It just means it's stopping it. So we created one time framing here in the B period because we got the B period high 2 ticks above the A period high. So we created good excess to the upside, but we did not pull the B period low below the A period low. So that's what creates one time framing. If one 30-minute period, so one of these letters, the high of it is above the previous high, but the low of it is not below the previous low, that's called one time framing. So we created one time framing here in the B period, and then we kept it going all the way through the E period here, right? The high is C above the B, D above C, E above D. Okay? So right here in the F period, when we got 2 ticks below the E period low, we created good excess to the downside. So that was the end of one time framing. We call that the cessation of one time framing. This action, it's kind of hard to explain, but essentially this is a way to visually see in the charts what is happening psychologically to the traders that are trading in the market. Essentially, that when you get the 2 ticks below the previous 30-minute time frame, that means the psychology of the market has changed. That we are no longer bullish, we are no longer momentum pushing higher. That now we need more price exploration in order to get that started again. So the market needs to bring in a bunch of bulls and start over with a new push higher in momentum. What it often needs to do when that happens is it needs to pull back, right? It needs to put prices at a discount in order to bring in the buyers. And so what it does is it just rotates. It goes up and down until it's pulled back enough times to bring in enough strong hand buyers that you're then ready to break out of that range to the upside. Right? Or you fail, you keep grinding up and down and you can't bring in enough buyers, and then the market fails to the downside and looks for buyers at a lower level then. Okay, so it's just a two-way auction process. This is a sign the auction to the upside is over, and now we need an auction to the downside to find a new price level for support. Well, Daniel, looking for a stop on a short from the E period high is a little bit tricky. And it's sort of one of those, you got to trade how you trade. If it were me, I'd have already taken profit, right? Because we're back at the POC. Actually, no, when I saw the cessation, I'd ride it out. I'd want to go a little lower. But it's hard to know because now that we've gotten the cessation of one time framing, the market is rotational. On the pushes down, it can literally find support anywhere, right? It could just push down a little bit into the single prints, rotate back up, push down a little more, rotate. It can do this dance all day. And so if you can sit in your short trade the whole time and wait for it to grind its way back down, yeah, I think the base of the single prints are very likely to get filled today. But I just don't know that it'll happen quickly for you. You might be stuck sitting in it all day. So it's kind of up to you how you want to trade. But yeah, for what it's worth, I think these single prints need to be backfilled. So if you're holding trades for a longer time period and you got the patience, I think that's a very high probability trade. And good on you for catching that high. You were catching the knife to the upside, but you pulled it off. Okay, so once again, the market can find support anywhere inside these single prints and then rotate back up to the POC. But just keep in mind, we got all these levels down here with only 500 contracts at about 41.89. Okay. And all the way down here to just below the B period low in the A period single prints, where there's only 167, 150 contracts down here at 41.84. And those probably likely need to be backfilled at some point. Fausto, are you on a different YouTube? Because your last one didn't have your last name or a picture of you. You're a good looking chap. But yeah, maybe you accidentally opened up a different YouTube. Thank you for following. Thank you for subscribing. Good to have you, brother. Welcome. Uh, Weird. Well, now you've outed yourself. We all know your true identity. First, Fausto's first and last name exposed to the public. But hey, by the way, brother, go ahead and subscribe to me on both of those channels. All right, so we pulled the POC a little bit lower here as the market continues to rotate. Yeah, it's not a dead cat. It's just rotation, right? A dead cat implies that the market is trending down and that this is just a sort of bounce within the trend down. The market is neither trending up nor down at this point. It's rotational. All right, well, Charles, why are we getting nitpicky about this? Who cares? If the market's going to push its way down, to fill these single prints in the B period, won't it be trending down? No, it won't. And that's important to understand in terms of Miles joining us. Welcome, my friend. In terms of understanding what's happening with the market, a trend down, which is a scenario where you get a dead cat bounce, is a very different thing than a rotation. Rotation is a search for two-sided trade. It's a search for a place where the market can find support and push higher or find resistance and push lower. So it's just fundamentally a very different thing than a dead cat bounce during a downtrend, right? So this is just rotation. The market will keep doing this. It will keep getting above the POC and then finding resistance. It could do it literally anywhere below the E period high. Getting above the high of the E period could potentially bring a breakout, but it could even bring more rotation, right? We might get above there and then pull back down. But until that happens, until you get above the E period high, you should just assume it's going to pull back to the POC. And that shouldn't cause you to think, oh, it's a dead cat bounce, or oh, this is happening, or no. It's just rotating. It's just doing what it does. There's nothing more to think about. You don't need to overthink it. Just let it do its thing. Let it keep going up and coming back down and keep going down and coming back up. And then you wait to see how it breaks out of that rotation. Or you take trades in a rotational way, meaning reversion to the mean trades during the rotation, right? Hit me in the chat if that was confusing, but I think that should give some clarity here. Don't look for this to start a new trend. Okay? Don't look for it to start trending down. Don't look for it to start trending up. It's not going to do it like that. It's going to break out. That's how it'll trend up or trend down. But first, before that breakout happens, it just bounces. It just goes up and down. Ian McGregor. Wow, what an honor to have you here, sir. Thank you for the sub. Welcome to the community. Dude, Jeff, another great idea for a t-shirt. Patience pays good give all of that's part of the t-shirt, including the stutter. Uh, Patience pays very good dividends. That's a great idea. It's a great conceptual idea. And it's not just in today's market, it's in every day's market. Okay, I'm not going to keep marking these H period highs because it's pretty much going to be weak almost anywhere up in here. So just keep in mind there's 1 week reference above, 2 below. Yeah, Jeff, the scenario of getting up to 4,200 seems very likely to me as well. But the question becomes, once we get up there, do we get a breakout, right? Does the market push up to this high, get to that 4,200 number, get a couple ticks above the E period high, and then we start to build support. We start to bring in volume up at this higher level. If not, I suspect the rotation will continue and we'll pull right back down to the POC. Okay, they'll get that little stop run, right? They'll get some excess to the upside. They'll get all those all that short covering, and then it'll pull right back down. The market remains rotational. Daniel. We'll save that one until I get my energy hyped up a little more. That one requires yelling. It requires enthusiasm. I'm still too sleepy for that. So for those of you that were asking about the cessation of one time framing earlier, this is just kind of textbook what to expect, right? The market was trending higher and the price just kept pushing and pushing and pushing higher. until we got to the F period. We got 2 ticks below the E period low, creating the cessation of one time framing. We then rotated down, back to the POC, up, back to the POC, down, back to the POC, up, and now back to the POC again. So that's what rotation looks like. You know me, down with that POC. Okay, well, as we work our way up to the highs here, I am, as I always do, keeping a close eye on the ticks. And it is possible to get a breakout here. The ticks are trending to the upside. So the idea is if they can continue to trend now that we're up here at the highs of the day, is that the sign that the buyers are stepping in? We'll know once we get a few ticks above the E period high here if we start to bring in volume. So if more and more of the candles right around this area start to turn pink, we know that that's buyers stepping in for the breakout higher. There's always the chance that we just get the rotation back to the POC though. So let's keep a close eye on those ticks. Okay, poor high. Do we get a push away or do we break right through? Breaking through is more bullish. Okay, a little short covering. So once again, we want to see the market pull back down towards the E period high and start to build support in here. If it fails to do so, we're likely to rotate back to the POC. Okay, so the market's grinding pretty slow here, but it's not really bringing in a ton of volume. So I'm looking for that tick that kind of breaks the uptrend here. That one red bar that kind of pushes below the lows that we've got. And that could be the candle that ends up pulling us back down to the POC. It is bullish that as price continues to push higher, it also pulls the the value area higher. This blue shaded inbox. As that moves higher and higher throughout the day, it means that we are getting acceptance of higher and higher prices. So that is also bullish. If the ticks remain, if the trend in the ticks remains up and to the right like this, this could be a breakout that leads to the next trend higher. But again, we're not really getting the volume to support that. We're not getting a ton of support in here. So let's wait it out a bit. Well, we haven't gotten that big red tick yet to break the uptrend in the ticks. And we are starting to bring in volume. We got our first candle of volume right here at this E period high that's turning pink. So the more volume we build in here, the more likely we have another push higher coming, as this would be a breakout. Still just keeping an eye on these ticks. Looking for that break of that uptrend. Then I'll know to look for the rotation back to the POC. All right, so once again, those ticks still remain. That trend remains in the ticks, and we are bringing in more volume up here, right? So this, despite my not expecting it to be the case, this is starting to look like it wants another push higher. So I'm just setting myself up for that as a potential outcome, and just continually watching these ticks, waiting for that break when we run out of buyers here, and the market starts to pull back. But I can't ignore the fact that volume is building up here. Look at that J period starting with a weak J-Lo. Up in this MF and a single print left there in the I period. Rocky, that's a great question. Why couldn't the volume that's building up here be shorts? Well, the fact that the market isn't moving anywhere is a sign that half of it is, right? I mean, the market keeps putting in volume, but it's not going anywhere. So you got to assume that it's about 50-50, that only a little bit more of the volume is long than short because the price is only barely moving up. But the question becomes, sorry, let me backtrack. So what the question is that leads me to get there is, are we still rotational, or have we broken out of the rotation and we are now trending again, right? Markets are always either trending or rotational. They're either moving towards a new place for two-sided trade or they're in the middle of one. Okay, so I'm trying to figure out here, should I be getting short at the high of the J period for the rotation back to the POC, or should I be getting long for the breakout to the upside, right? And so how do I know? I got to have a way to guess whether I'm going to go up or down from here. I can't assume every time the price goes, up on a rotational day, it's guaranteedly going to rotate back down. I'll lose money with that strategy. So I have to have a way to know if the rotation is done and if we're ready to break out from that level. The way I do it is I look at the previous high, which was where I would, if we're going to break out, right, first we have to break out over the previous high. So then once we get there, I watch what happens at that level. Does it bring in a lot of volume or does it not? If it just pushes price higher and there's no new volume that comes in, well, then it's just short covering, right? People who put their shorts, put their stop losses on their shorts right above that E period high, it's just them, boop, pushing up. But if you start building volume, it's a different story, right? So I don't know whether the volume building here is long or short volume. I assume it's about the same because price isn't going anywhere. But what I do know from this volume is that this is not just a short squeeze, right? This is not just short covering because we got their stops. This is new business taking place here. This is new two-sided trade. So I just want to be aware of it, right? It's not enough to get me long or enough to stop me from shorting for the rotation back to the POC, but it just keeps me aware of what's happening in the market so that if the market starts to push higher, I'm not one of these people that's yelling at my computer screen, hey, you motherfucker, go down. Well, how is the market going up? It's a rotational day. I don't understand. It's not supposed to do that. Like, I don't ever want to do that as a trader. I don't ever want to become emotional about what's happening in the market. And so the way I protect myself from having that reaction to the market is to be prepared for whatever could happen and then be constantly playing a game of what is the most likely thing to happen now, right? When we had just pushed above this E period high, the most likely thing to happen was a rotation back to the POC. I would have gotten it if I got the break of the ticks real quick. But now it's been, almost an hour, right, since we broke out of here, or I guess less than that, probably like 40 minutes or something like that. And we've gone nowhere. We haven't broke the trend in the ticks. We haven't pulled back price at all. And we're building volume. So I must be willing to tell myself the story that this could be a breakout. And as soon as I'm willing to do that, oh, fuck, well, that changes the way I want to trade, right? I don't want to go short here if this could be the breakout. Or I want to go short with a very, very tight stop. So that's just, when you guys hear me talk about these things out loud, I know a lot of times it sounds like I give, contrary ideas, but it's just, that's the way my brain processes what's happening in the market. Every minute of every day is I'm constantly balancing counter ideas in my head. Did I confuse everybody thoroughly? Fantastic. Can I add volume delta to my chart? I don't know. To be honest, I mean, obviously Thinkorswim I could, but I don't know about on the profile. Maybe you can. And there's the breakout, right, guys? That's the point. That's why I keep watching that volume and keep watching it, because it could happen, and here it did. Now, that being said, it's not a sensational breakout, right? It's not like this is going to cause a bunch of Fomo or anything like that. We still have 3-week references below us and all the single prints, so really 4-week references on a rotational day. So still a very high probability that at whatever point we run out of buyers, we're still finding them. But as soon as we do, we're going to get that probably liquidation break style now fall back down into value. Okay. But for now, we are in a breakout and the market will continue to push higher. Okay, once again, thin volume below, 300, 500 contracts here in the J period, likely to get backfilled. Armando asks, would my analysis work on the NQ since they're a little different? The answer is yes, but not the specifics that I use. Okay. So the idea of excess and balance are exactly the same on every financial market on earth, but what the specific, references on the profile are for excess and balance, I could not tell you. So for example, on the ES 2 ticks on 30-minute TPOs is excess, but I could not tell you what it is on the NQ. Okay. NQ very clearly creating a P-shaped profile. It's not a pretty P, but it does look like a P. You guys see that? Here, let me use the drawing tool. I'm going to have to delete my tick drawing. Oh, no. Okay. So you see the P here? Boom. Boom. A P is a sign that it is more short covering and less new money buying. Okay, this can always change by the end of the day, right? The market pushes up here. It pulls back down. It spends some time around here. Boom, all of a sudden we have a giant bell-shaped curve for the day. But right now we have a P. Looks a little more bell-shapey here on the ES. Okay, so they're pushing the breakout. They're above the value area now, but they have pulled the value area even higher. Okay, still holding that trend in the ticks. Yeah, the market is bullish. I'm going to switch myself back to neutral, though, only because I just sense a looming liquidation break somewhere here today. Just how thin the volume is on this push higher. You know, the momentum buyers are in control, but they're not getting much for it. So they'll run out. All right, killing it, Rocket. Happy to hear it, brother. We'll see you tomorrow. John's question. Does the P mean pullback, right? Does the P-shaped profile mean the market is going to pull back? Well, you guys know me. I don't like to be too exact about things like that. The P is just one more thing to add to your narrative, right? If you were short, for example, let's say, let's say you went short here around the highs on the 21st on Friday. Okay. You went short here on the highs. We're looking at the NASDAQ, right? So the market pulls down. You're feeling really good about your trade, and you think this is a much bigger, like you think this sucker's going way, way down. So when you watched the market open this morning and single print its way right back up past your entry for your short, you might start to panic. And you might start to think like, oh no, am I screwed? So then you see the market get up to here. It starts bouncing around. It starts rotating up at these higher levels. And you're trying to figure out, do I just accept that my trade is wrong? Do I stay in the trade? Or even if you're a really good trader, do I add to my position with a better entry, right? That's what you should be thinking about up at these levels. So the P shape might give you the confidence to just not exit your short, right? Because you know this is just short covering. It's not new money buying. It is still prices moving higher, which can always bring in new buyers, can always find acceptance at higher prices, but it's just not a sign that there's a bunch of new people trying to push it even higher. So you might decide to stay in your short for another day and see if you get lucky and you get the pullback in the overnight. Same thing with all this excess, right? When you create all this excess down here, you worry that that needs to be balanced off. So by getting the P shape, it's a sign that the balancing that's happening here is just short covering. And so it might not be the acceptance at higher prices. Again, meaning you might need a liquidation break. So it's the P shape doesn't tell you anything specifically. It doesn't say the market's going to do this or the market's going to do that, but it just gives you one more piece of information to add to your own narrative. Okay? So my narrative right now, we just created another poor high. Okay? So it's short-term traders trading this market. What do we know about them? They got to take profits sooner or later, right? So we got short-term traders trading the market. The day became rotational here in the F period. Okay? We're above value. We've got 3 sets of single prints, 2 inside the range. So that's 2 sets of single prints that are weak, 3 weak references below, a poor high above, right? My story is becoming that this market is getting itself overly long. Now I'm not going to fight the trend. They're still breaking out. They're still doing what they're going to do. But man, would I love to get short against this, right? So as soon as I see the thing I've been waiting for all friggin' morning, the break of these ticks, which is kind of starting to do with time instead of price, right? It's starting to break the trend by just bouncing around here. But as soon as I clearly see the ticks start to pull back, I'm going to jump on a short like it's nobody's business. Because we're so far above the POC, we've got so much weakness below us. This has to be laggard buyers in here who are just trying to get some money. So once they give up, whereas earlier when we were having the same conversation down here, I was saying we'd probably get a slow grind back down towards the base of the single prints. Now it's probably going to be a liquidation break because the market's getting itself overly long. But when I say that, that does not mean go short. Just because I said the market's set up for a liquidation break does not mean you should close your longs or open shorts. We are still monitoring for continuation higher. Okay? We wait for the resistance. We wait for that break in the ticks. Then we enter our position. Otherwise, we just sit on top of our hands and watch. Good question, Mackie Max. I'm really referring more to retail traders in terms of the way they think and the type of levels that they pick. But that also includes an institutional trader who has a mandate to exit the market on a day-to-day basis. You know what I mean? Like if you work at the Goldman Sachs trading desk and they tell you, you're trading low cap stocks or whatever, and you have to be flat at the end of every day, even if you've got better information to work with than retail traders, you still have to go flat at the end of the day. So it's really just referring to, and even more so than specifically talking about the actual traders, it's just more so a signal of what kind of market we're looking at. And this many poor highs, one after another, is just a sign that this is not, big money players trying to push the market higher. We know that because the short-term traders are able to create all these poor highs. And it's not, big money players that are trying to push the market down because they wouldn't do it at these super specific references. So it's just an idea that it's little short-term retail traders like you and I just kind of doing battle, picking each other's pockets, trying to figure out who's right and wrong, and that there isn't necessarily a bigger trend happening. Trading Ducky, I don't know how you sit. That doesn't seem like, I don't think I've ever had that problem. 510 was a while ago. Let's go take a look. Yeah, the single prints from the J period. Yeah, we are backfilling those right now. And that's our next target to the upside, right? When we've finished backfilling these, that's where the resistance is waiting for us. So yeah, thank you for pointing that out. Might need to reload my data. I highly doubt we had exactly the same number at all these different levels. Yeah, there we go. Yeah, it's frustrating sitting on your hands all day, especially when there's volatility, right? Like if you've been sitting on your hands from the breakout here at the eye up to here, you're like, oh man, all that money I left. But it's always more profitable to sit on those hands, painful as it might be. Yeah, relax, Keith. You're right. That's a simple solution to your problem, Donkey. Just put on some pants, bro. Well, if you refuse to wear the pants, then I guess you're going to have to go with Jonathan's suggestion. Just start wearing some gloves, man. Put on some rubber gloves in the morning before you sit on those hands. At least keep it sanitary. Or I guess you could put condoms on each one of your fingers. That's another option. Thanks for calling, Andy. Press 1 for luscious lips to the right. Press 2 for some other thing. Damn it, this joke fell apart. I had a joke before I started. It's gone now. Yeah, design knob, my assumption from the number of caps you just used is that you are still short the market, or that you exited your first trade and have entered another one short. You know, I really want to just say to you, chill, wait, you'll get your liquidation, you'll get your pullback, because I do feel confident it'll happen, but then I don't want you to lose money on my behalf. So if you're feeling squeezed here, if you're feeling like you can't take it anymore, just exit your trade, go flat, and start over with a fresh mind. And maybe you make back some of your losses before the end of the day. But I will say, I am looking for a short here. I'm waiting for this market to give me the signal because I think it's coming. Donkey. I know why you're saying that too, because the minute he closes his short, you're going to enter one. Is that what you were thinking? Yeah, this is how the market squeezes people, guys. It fakes you out and then it pushes you as far as it can push you. And the thing is, Design Knob's not the only person short feeling squeezed right now. And it'll be when the very last of them gives up, that's when the market pulls back. No, Andy, I don't talk about my trades live anymore. I won't say a goddamn thing. But I will tell you, I love to go short above value. That's all I will say. And you know, if you look at the high of value right now at about 2405 here, what do you got beneath you? Weakness in single prints, 2 week references, the POC, a 3rd week reference, the halfback, another row of single prints. This is a lot of targets to the downside above the fair value to trade for the day. So that's all I'm going to say. Yeah, the value area is calculated based on volume. It's where 70% of the day's volume traded. It's actually like 68 point something, like 68.7, but it's basically 70% of the day's trade. As for Amazon buying MGM, I'm happy for it. Let them do it. The old movie studios are so stuck in the old-fashioned way of approaching business. They need to get bought out by younger, fresher minds and get a reset. So I think that's fantastic. I think Amazon does a great job of how they produce content. They make good shows. They do it right. Okay, Jamie, I feel like I've been explaining it all day long, but yes, I'm happy to go through it once more. Why do I think there's going to be a liquidation break? What causes liquidation breaks? Why do they happen in markets? Okay, they happen because too many people get themselves long in a poor position. So they get themselves long and it's not a good trade for them. They're not going to get very much opportunity to take profits. Okay, that's what causes liquidation breaks, is there's just too many people holding long inventory that are weak hands. And they're weak because they didn't get their long inventory at a good price. So for example, a good place to have gotten your long inventory this morning would have been the A or B period, right? Think about it. If you went long the market anywhere down here below half back today, what have you been feeling all day long? You've been feeling great. You've been feeling really good. The market just keeps pushing higher and higher and higher. So why on earth wouldn't you be strong in holding that position and just keep getting more and more money for it? Right? Look how easy it's been. You've just chilled. You entered here and now you've been chilling all day. And the market's just been giving you more and more profits. So if you got into a long trade with a good position, you're going to be stronger, quote unquote, in your ability to hold on to that position or even add to it. Maybe, if you bought down here, you might have bought some of these lows with some confidence because you were adding to a winning position, right? As opposed to trying to break or, what's that called when you add to a losing position to bring down your entry price. Anyway, it's like, so stronger hands buyers are down here. But now let's think about the people who were buying in here, right? In here. They're all weaker hands buyers. Why are they weaker hands buyers? Well, why did they buy the G? The person who put their order in right here, why didn't they decide to buy down here at the F period low? Why didn't they wait for the market to get down into the single prints? We don't know, so we have to guess. What was the thing that made Joe Schmo, who bought this G period low, buy? Probably it was the C period low. So we know that this is going to be a short-term trader. He's looking at a candle from over here and he's buying right there. He's seeing this low, he's buying it here. It's that simple, right? So if it's a short-term trader who's holding this, and a short-term trader who's holding this, and a short-term trader who's holding this, right? That tells us there's a lot of weak hands traders who are holding positions here. Now, right now, they're okay. Right there. Why would they sell their position right now? For all they know, they could get another push like this later on in the day. They might get that M period that comes along and shoots them skyrocket straight to the moon. So right now, they feel good about their position. But what happens if we run out of buyers up here? There's just no more people that want to do business up here, and the market starts to pull back. Right? What are the people that bought here going to do when the market gets, say, to the base of the single prints? They're going to take profits real quick, right? They're going to try to close out that long trade before it gets back to their break even. Well, what's that going to do? Boom. It's going to make the market drop like a brick from there to there. Boom, boom. Because all the people that bought here, pushing it up from here to here, are trying to take their profits, right? So they all start to freak out and they take their profits. Boom, market falls down to here. Well, now what are the people that bought down here thinking? Oh, fuck. Look at how high we got. We're pulling back. It's happening so fast. What do I do? What do I do? And then they start to exit their trades, right? Well, then what about the people who bought this H period up to there? What about all these buyers, right? As the market starts to very rapidly, because remember, liquidations breaks happen very quickly. What are they going to start doing? They don't have time to think about it. All of a sudden, they're in underwater. Their position's losing money. They close out. So boom, it falls even further. And so on and so forth until you've repaired all these weak references, until you've basically shaken out all the people that bought here, bought here, bought here. You get them all flat, right? Which causes the price to fall very, very quickly. And then the people who were buying in these levels, they instantly get profits. The market rotates right back up after the liquidation. And now, guess what they are? They're strong hands buyers, right? Because they bought and instantly were in the green. So they're feeling good, and they're going to hold on to it and hope for that spike later in the day. Does that make sense? So it's liquidations breaks happen when the market gets itself overly long. And what that means is too many people buy at poor locations or at weak locations. And there's just too many weak hands buyers in here. If they cannot get any profits, they're going to exit very quickly. Okay, we're now back down into the... Well, shit, I didn't get a chance to short it because I was busy talking. Oh, no. Did the ticks break? It's breaking on the ticks, guys. I've been calling it all day. And I was busy talking to you. God damn it. All right, well, we're back into value, and we've got all these weak references. So let's see what happens. Real quick, just to mention, if we do get that liquidation now, potential support on the 20 moving average, as well as at any of the repairs of the weak references. So you may just get to the first one, repair it, find support, and push higher, vice versa. And then the 20 moving average down there. The lowest level of support for me is the base of the single prints at 41.85. You're right. They faked me out. They were going to break the tick, and then they just wicked it right back up. The time will come, young Padawan, to short this market. It makes me feel like such a child that of all the comments that have made me laugh today, that one from Rocky actually made me laugh out loud. Okay, weak L period high and low here. Interesting choice. News blip. Yeah, let's see what happens. All right, looks like they got another push in them. The ticks are about to push higher than they've been all day. Nothing has changed in my narrative. I still see a pullback to repair some of this weakness, targeting the POC. Another poor high. This is the song that never ends. It just pushes and pushes again. Some people bought it down here and they pushed it up higher. Then another person came in and bought it once again. This is the push that never ends. They create a poor high once again. They just don't want to mess with those 69 contracts. All right, well, was the poor high enough to give us the liquidation break? Let's see. We didn't quite repair that weak L period low. We just pulled it down one tick. Is it finally ready? It almost looks like it's starting to downtrend. But we finally get a one big red tick. Give it to me, market. All right, the backfilling has begun. We're backfilling these contracts here. Also, keep in mind this 20 moving average is pulled up pretty close here, so there might not be much legs to a liquidation break. Could find support right at that 20. Here we go. We're starting to get that liquidation break tempo. Right? You see what's happening? They're freaking out. All these people that bought on this way up, they're going to slowly start to freak out, and it'll move faster and faster and faster. Sometimes markets have to break before they can rally. Okay, so that's the single prints backfilled. Still no tick, so this is still kind of just a regular pullback, not quite a liquidation yet. All right, well, I'm going to move my stop to a tick below break even right here. I might get stopped out and have to re-enter the short, but there's a chance we're bringing in buyers because we can't break this tick. Yes, market. Yes, get fearful. Oh no, the buyers! The buyers! I agree. It's starting to feel like the POC might be too much, but you just can't underestimate the power of the tempo of the liquidity break or the liquidation break. We just haven't gotten it here. This looks on the ticks. This looks more to me like just a regular pullback. But when you get that one big fearful red tick that just shoots down, that's when the panic sets in and the price can just dive from there. Problem is there is no one big player playing. It's going to take millions of little players. It's very wise, trading donkey. Sounds like something the Buddha would say. We need the murder bot. Oh, it's coming. 6 minutes to M period. $26 minutes to murder bot. All right, well, we're starting to bring in volume. Time and volume is a sign of acceptance. Oh no, I'm one tick from getting stopped. Ooh, nice. Still in it. Well, we're getting that tick that I was been looking for all day here in the NASDAQ. So let's see if the NASDAQ pulls back towards its 20. Okay, also a poor high on the NASDAQ as well today. All right, guys. Well, you all know what I feel for the M period today. I think we're going to see a rotation down towards the POC. If it brings a breakout, the M period, it could come up here to target the J period single prints up at 42.14. So I'm keeping my stop a tick below break even here on my short. But I do think that we need to rotate down and repair a few of these weak references. So I assume the M period will have to do the work. Hit me in the chat. What do you guys think is going to happen during this M period? Where are we closing today? Let me know your thoughts. ES Trading, thank you for subscribing. You have definitely come to the right place. Welcome, ES Trading. Welcome to the party. The market was wanting to liquidate all day and it won't freaking do it, party. Nope. Gianfranco. Seeing 42.14. Seeing a little push higher. Make some new highs here. That's the M period. Rocky doesn't care. He just wants chaos. Very helpful, Rocky. Jasu is seeing 41.95. Armando doesn't even care about the market. He just wants to get us to 100 likes. Thank you, brother. Trading Donkey seeing a spike higher. Then a pullback in the end period. Also very likely to happen. Yeah, just for the record, if we don't get this liquidation here in the regular trading hours, the overnight market will pull back down here. I just don't care because I don't trade the overnight. Leighton is seeing 41.95. RK Leon, 41.96. Josie is a friend. All right, Jonathan from Australia saying if we can get to 41.99, we might see that POC. Asif is back with us. Good to see you, brother. First he was thinking 41.94. Now he's thinking 41.91. Now he's saying 41.81. Asif, make up your mind. Oh, you're killing me here. Josie seeing 42.10. It's not contrarian. We've had the first few people were all bulls. All right. Well, I'm happy to announce I did not get stopped out of my short. So I'm now going to pull it down a few ticks and just sort of trail it as we pull down here and repair some of these weak references in the M period. Again, potential support at the 20 moving average for both indices. Yeah, see, this in the NASDAQ's what I've been waiting for. I don't know why the NYSE won't do it today. How is low cap doing? I bet people are buying up the Russell. That's probably what this is. No, about the same. No, what you're talking about is for one time framing, like this morning. If I went long in the A period, I'd put my stop just below the B period low in the B period, and then just below the C period low in the C period. Sorry, in the C period, I'd put it below B period low, in D period, below C period, so on and so forth. But no, on this move, I was just kind of dragging it a few ticks on its way down. But then a couple minutes ago, right at 4,200, I just took profits on the short, purely out of a lack of patience. Just sick of sitting in a trade during M period. So just took my profits, and I'm going to watch the market for the rest of the day. Also, it looks like the NASDAQ kind of bounced almost off its 20. So I do suspect that 20 will be support when it pushes down to it. And if it's going to be support on the NQ, probably going to be support on the ES as well. So we'll see what happens when we pull back down to there. J-Lo is repaired. So 2 week references and a set of single prints left behind. And a poor high above. Jonathan. Sorry, guys, I missed the murder bot cue. Cue the murder bot. It doesn't look like it's really going anywhere. Today's murder bot is to do nothing. Yeah, it bounced off that 20, but then it crushed right through. It's riding right along on the NQ there. Wait, seriously, Jonathan? J-Lo's back with... That can't be right. J-Lo's back with Ben Affleck? I'm not into celebrity gossip at all, but that is one piece of gossip I would want to know. Even after he got that Phoenix tattoo on his back? Wow. All right, so this takes us back to earlier when we were up here in the J and K periods. And I was talking about how the market needed to pull back to repair all the weak references. And people were asking me, well, Charles, how do you know? How do you know? They were saying, look at all the volume, Charles. How do you know it needs to pull back? And now you can see why, right? Earlier today, we had like 5 or 6 weak references stacked up here. End of the day, just the 2, right? Just the weak G period low and the single prints. That is no big deal. We can easily leave that behind. But we couldn't leave like 3 sets of single prints and a couple weak references and all of this stuff. That was too much. Right? So the market gave itself a little pullback here. Nothing intense, not even really a liquidation break. And, it's finding support in the node of volume where it built this morning. So all of this seems very bearish, very bullish to me. Value is higher once again. Okay. Right. Value is higher. Value is overlapping to higher. And now value is higher again. So the longer term trend is to the upside. Now that we have finished the day up here at higher prices, this is a P shape. It doesn't look like a very easily readable P shape, but that is a P shape profile. And so that is telling us that it was more short covering than new money buying. Okay. But it also shows some acceptance of higher prices. So the question comes, we got all this excess, all these single prints that we created. So the question becomes, how do we balance off these single prints? Did we do it today with just time? Meaning we can open tomorrow to higher prices, or we can open tomorrow inside today's value and then push to higher prices? Or do we still need to pull back with price and come down here and backfill these single prints? That is yet to be determined. Man, I shouldn't have got impatient. This would have been a beautiful trade from where I entered up here in the K period if I just stuck it out. But I'm too impatient to wait for the murder bot. John, you got a Pirate Traders tattoo on your back. Well, now J-Lo will definitely hook up with you. That shit's an aphrodisiac. All right, yep, back to the POC. You know me. And just for educational purposes, for the record, you don't normally have to wait for the M period for this. Normally you get, when you have this kind of poor structure on the way up, you get the liquidation break earlier in the day. You get, 11 a.m. or something like that. It's just coincidental that it took until the end of the day for this to happen here today. Yes, sir. All right, looks like they're going to try to repair that last week reference before the closing bell rings here. So if the overnight, I don't trade the overnight, but if the overnight makes its way down to the base of these single prints, right here at about 41.85, and then it finds support, that to me would be a good long trade. Okay, now we're starting to get ready to backfill some of these single prints in the B period. Why, Charles? Why is this all happening? I told you guys, because all these people who bought in here, they got to take profits before 1 o'clock. Short-term traders are weak hands traders. G-Lo is repaired. All right, that M pullback low is weak. All right, guys, market is closed. Awesome Monday. I hope y'all made some money. I know I did. And I look forward to seeing you all here tomorrow morning. Thanks a lot. Bye-bye.